Hey listeners, it's Paul Andriola here. Why not join our community at Small Cap Discoveries, where we offer our members direct access to some of the best microcap investment opportunities available. Our members are getting access to premium microcap financings, research reports, and direct access to management. Sign up today at www.smallcapdiscoveries.com.
Hi, everyone. Welcome to Small Cap Discoveries conference call. It's May 2nd, 2024, and today on our call we have the CEO, Jeff Kueber from Nevis Brands. Nevis trades on the Canadian Securities Exchange under the symbol NEVI, and it also trades on the OTC under PSCBF. The company currently trades at 10 cents with 38 million shares outstanding, or about a $3.8 million market cap. I'd now like to hand it over to Paul Andriola.
Thanks a lot, Trevor. Yeah, good to have you here, John. Nevis is a new name to a lot of our membership. You're in the cannabis space, which is something that we've been talking a lot about in our group. So happy to have you here. Certainly happy to learn a little bit more about Nevis. You've got a presentation. I'm just going to hand it over to you and let you go.
Awesome. Thanks a lot for having me, Paul, and thanks everyone for investing your time with me for a few minutes today to talk about Nevis. I'm John Kueber. I'm the CEO of Nevis Brands. We're based in Seattle. We've been around for about a year. We did a sort of IPO, a reverse merger in July 1st of 2023. So we've been trading for just under 10 months. Usual disclaimers. But I'll jump into what we do. So we own some very popular cannabis beverage brands. Most notably, we own a brand called Major. Major, as the screen says, we've sold over $80 million, over $80 million at retail over the last 5 or 6 years. So this isn't like a speculation that we're wondering if this is going to work. Major's a proven commodity in the cannabis industry and has really stood the test of time through a lot of different changes in market trends. It's a staple of the cannabis business right now. So Major's been around for about 5 years. We acquired this brand with our listing of Nevis Brands in June of last year. I was actually involved in the business for the last 5 years. I worked with the prior ownership, worked with the team that launched this, conceived of it, and took it to market, and really saw the potential for it and saw an opportunity to make the acquisition. So we did that, and we've made a lot of progress and done a lot of expansion that I'll be talking about. So our model, again, we'll go into all these in more detail. Our model is a royalty collection business. So we have these brands. We go into each state. And for those of you who are not familiar with U.S. cannabis is like every state is their own country. It's their own laws. It's not federally legal. So you have to launch it and produce it and comply with all the regulatory environments within each state. So we partner with leading producers in each state, provide them with our brand. They produce it, they distribute it, they sell it, they collect the money for us, and we collect a royalty that is around 20% of all the wholesale. So if it sells for a wholesale for $8, typically we're collecting $2.25 per unit. So that's our model. We're very low capex. We don't have a lot of future capex investment. We're really an IP company more than anything that has some valuable IP that other partners are willing to not necessarily pay for up front, but invest their resources to make it successful within their market. And the final thing I'll mention, just to finish the overview, is we are actually at an opportune time to give this presentation. And I've mentioned this in a prior news release. We announced our earnings about a month ago for our Q1, which ended February 29th. And we're in the midst of turning the corner towards EBITDA positive. We had a very narrow loss of $20,000, and Q2 we're projecting some increased revenues and some lower expenses, and we're pretty excited to put out some new financials for Q2. So a little bit more on Major. Cannabis drinks, there's been a lot of talk on cannabis beverages over the last couple of years, and a lot of different people, different groups, some very well capitalized groups have tried to succeed in cannabis beverages. And frankly, there's been a lot of failures. And main reason why is most people can't pull together, what we sort of refer to as our triangle of something that tastes really good, something that works really well, meaning it gets people high very quickly, and it's completely reliable and safe. We've never had a single recall, never had a single issue with Major, or frankly, any of our beverages in terms of pulling them off of shelves. And we've had very little, nothing major in terms of regulatory compliance that's been an issue. So Major is this 100 milligram beverage, and we sell it in both a 6-ounce format, which you see in some of the images, and also a 2-ounce format. Now, 100 milligrams sounds like a lot for most people. They're not consuming 100 milligrams, or what should I say, for most people outside of the cannabis market, when they think of, or casual users, they think of 100 milligrams as a lot, and it is. But frankly, that is the market right now. Heavy users are trying cannabis beverages, and they want to get as much cannabis as they can that tastes good in a valuable package. And that's what Major does. It's maybe trite to say, because every entrepreneur, every founder is going to say their beverage tastes great. We have the advantage of saying we have 80 million bottles to prove it. Major has these flavors that truly pop, and people aren't getting that cannabis weedy taste, and that's why they come back and buy it again. So we started with these 6-ounce bottles. Shots are a more recent development, and we have some other products that are leveraging the Major brand that we'll be talking about in a second. We describe ourselves as the beverage MSO. We don't know of another company that has the coverage that we have. Washington is where we started. Washington is where we started, and the prior owners expanded the business to California, Oregon, and Ohio, and we're just starting in Colorado. We acquired the business, and over the last 10 months, we've essentially doubled our market footprint. Now, all of our expansion states are not yet reflected in our financials because they only got going a few months ago, but we've rapidly grown our market footprint, which is under our control. The part that's not under our control, but that we see happening, is the growth of the overall cannabis beverage market. So right now, it's around $1 billion. It's scheduled to have some pretty heady growth over the next 5 years. That's 54% on an adjusted basis over the next 5 years. There's very few industries that show that kind of annual growth. And it's driven by legalization. It's driven by more states going rec legal. And it's driven by overall awareness that cannabis beverages are a great way to enjoy this product. Just a little bit on that. When you think of a beverage, it's already established as a way to be social. But in the case of cannabis, it's also a way to consume it discreetly. It's a way to consume it on your own terms, meaning I don't have to go into some corner or around the corner or hide it. It's something that you can consume on a regular basis, like you use a lot of other products. So there's a lot of growth. We're excited to be part of that, and we think we're extremely well positioned. If you look at this map, we're actually missing Mississippi on this map that we just announced a couple of days ago, in 10 states, and we'd like to think we're going to be in another 10 states over the next 6 to 12 months. So I've only talked about Major. We actually own a portfolio of products, including a couple that are not listed on here. But Major, we started with these 6-ounce bottles. We launched these 2-ounce bottles, and we have some other products coming out in some different formats, notably gummies that leverage the Major brand. We also believe that low-dose products, 10 milligrams of THC products, have a great future. In Canada, which is where a lot of cannabis investors sort of base their use case from, 10 milligrams is the limit. Right now in the States, we're just starting to see some early seeds of the 10 milligram products having some popularity. In other words, it's going beyond the heavy user, and you're getting into what people often refer to as the soccer mom, starting to dabble in cannabis, and they want a lower dose. So we have a product ready in our portfolio for that. Also some interesting tinctures and topicals that sell in Washington only. But again, we'll talk about this more, but we lead with Major, but we have other products that drive our market growth within states where we're already established. So with this portfolio, we have a strategy of being first, or if we're not first, at least be very early in markets when they go legal. So a good example of that is when we just announced Mississippi. It's only been medical legal for about 1.5 years. There's not a ton of selection on the shelves, especially as it relates to beverages. We're one of the very first. And from looking at other markets where we've taken this model like Ohio, we're able to grab an exceptional amount of market share we're talking 50+% of market share by being early. And that builds a following that tends to build somewhat of a moat. We only partner with people who have immediate distribution. So we're not going into a market, hiring salespeople, trying to figure out how to talk to stores. We're working with partners that can take our product immediately, and by immediately, I mean within 30 days, get it on shelves and start selling. And we're generally revenue producing within 120 days of signing an agreement with a partner. We target the heavy user market. I've talked about that. We also price our products to be very affordable. We do have a low cost of goods. We have low capital expenses. We're able to really beat the market almost everywhere we go by being one of the lowest cost products for 100 milligrams. Once we're established, we then go in with some other products. Maybe it's lower dose, maybe it's gummies, but we always lead with major and make sure we establish that foothold. I'm going to shift gears and just jump into how the business is actually running. I'll just note that 2002 and part of 2023, these are pieced together from the prior business to sort of show how they were doing. But 2025 is going to be our first, 2024 is going to be our first full year of operation under our management. And we anticipate showing some decent EBITDA. Like I say, we narrowly missed that, but we do believe that our remaining quarters of 2024 are going to be positive. We see growing that pretty dramatically from 2024 to 2025. Main reason being our expansion states will have kicked in. Some of the prior expenses that related to us going public and getting started will have been sort of fully realized in 2024. And we'll have some additional states under our belt, as well as some maturing states, meaning states that we already have, but are growing even more. I'll show in a slide in a second. When a state or when a territory of ours is in full swing, we see it generating around $5 million a year in wholesale, or between $1 million and $1.5 million in royalty revenue for us. In 2026, that's really when things start to kick in for us. All states carrying all products, 20 different states carrying 12 to 15 different SKUs. And you see the results in terms of our gross margin going from 60% to 70%. And we've shown those gross margins to be valid already in our financials. We've been reporting between 63 and 65% gross margins on our financials to date. Just going into a little more granularity to show people where our run rates can go. Washington right now, we're at about 5.5 million. That'll show some modest growth in 2026. But you see some of these other states where we've really just gotten started. So much room to run, so much room for maturity. Obviously, not all states and territories are equal, and some may not get to that matured number that we're producing, but some may also go past it. For example, Ohio, we have projected at $1 million in wholesale. With it going rec, we actually expect that number to be even higher. So in terms of how our structure is, it's fairly tightly held. We have 38 million shares outstanding. Of those 38 million, between insiders, essentially a single broker at one of the Canadian brokerage houses, and some of their clients, as well as Source, the company that sold us the company in June. It's about 24 million of the 38 million shares that are out. Of those remaining shares, their average cost basis is around 40 cents in terms of, we did a rollback when we did the reverse merger. So they have a higher cost structure, and most of the ownership that's tightly held has a cost basis at around that sort of 10 to 15 cent mark. Recent price, you mentioned 10 cents, 12 cents. We've been in that range. It's not always, I think, CEO's place to comment on their valuation and where the market is valuing their company, but we certainly believe that with the EBITDA that we see ourselves projecting in 2024, as well as just our model of being a royalty generation business, you see other non-cannabis royalty companies such as oil and gas trading at 10, 20 times revenues. We look at it as we should at least be trading at 10, 20 times our earnings once we show people that we're actually making money. maybe close out with a couple slides talking about some of our catalysts. We see launching some additional products, some of the low dose space, but I think the one I'm most excited about is launching gummies. Gummies are already the most popular. The market for gummies is essentially 8 times the size of the market for beverages. Of course, with that is more competition, but we think we have an advantage. People love the major brand. They've shown that they love it. And we think it's a natural fit that they'll want to experiment with some of our flavors in gummy form. We have some of these produced, we have them approved in one market, and we will be launching these in the coming weeks or months. Of course, we'll continue on with new markets, just because I didn't before. We're in California, Oregon, Washington, Arizona, Ohio, Nevada, Michigan, Missouri, Mississippi. I'm teasing a little bit with the shapes of these other states that we're going into, but our pipeline of new partners has been building. It'll continue to build, and we'll just continue our expansion because, again, it doesn't take a lot of CapEx for us to expand into a new market. Finally, we just see our financials, plain and simple, as being a catalyst for the market. We think when people start to see our company turn positive and grow that number, people will really have no choice but to ignore the value of our business. Finally, we're supported by a very strong board. John Bell is the former chairman of Canopy. I know Canopy is sort of a mixed bag for some people, but John was there essentially from the start all the way to when Constellation made their investment. Constellation then essentially replaced the board. So when John left, that was sort of peak Canopy, if you will. Tremendous person to have on our board and has been hugely helpful. Also an early investor in our company. Vahan Ajamian is also the capital markets advisor for High Tide. High Tide's a great growth story. Vahan's been a huge part of that, and we're really honored to have him on our board as well. So maybe just summarize, we're a growing business. We're a royalty-driven business. We have a valuable product. Sometimes it's easy to minimize our financials being a royalty collection, but when you look at our product really being $80 million, over the last 5 years being $80 million, but being around $25 to $30 million a year of retail cannabis, it's a fairly significant asset, has some value. Said differently, if we were a vertically integrated company booking $25 million on a single product, I think people would be giving it a different kind of attention. So we have this fantastic asset that continues to keep giving to us. It gives us a base to be able to expand our business, and we're not hamstrung by a lot of difficult financials. We're high margin, and we plan to continue being that way, and we look forward to showing even better profitability. Most of this I've already stated, so I think with that, I'll hand it back to Paul and some of your questions.
Perfect. Thank you. Thank you so much, John. Reminder, everybody's listening, if you've got a question you want me to ask John, please use the chat function and I'll ask the question. John, you covered a lot of the questions I have here, but one thing I wanted to sort of understand clearer is you're already in a number of states. How do you go and sort of get into another state? I mean, obviously, you're not doing all the grunt work yourself. You want to find partners, but how do you source your partners? How do you determine if they're the right fit for you? And then what's the expectation on your end in terms of what you have to do and what they have to do to get the product on the shelf?
Great question. So, I think in early days meaning even before we acquired the company and I was involved, we were hunting for partners. We'd find markets that we wanted to be in, and we'd be calling up people who were successful with, say, a gummy or a pre-roll. Hey, you're successful with these products, you have distribution, how would you like to launch a beverage? And we have a discussion, either be a fit or it wasn't. You do various pieces of due diligence. That shifted a little bit to, we're able to be a little more choosy. Number one, we're preferring to work with partners that we're already working with. So for example, our partner in Missouri, Stash House Distribution, they've just been fantastic. They came to market in 90 days. They're way ahead of pace in terms of sales. And it was natural for us to talk about the other states where Stash House is active. So they're active in 6 more states. We recently announced we're working with them in Mississippi, and beyond Mississippi, there's other states that we plan to continue working with them on. So it's very comfortable. It's very good for us to be working with partners that know how to make our product, know how we work, know how we adhere to quality, how they adhere to quality, and that they have integrity in terms of payments. Now, in terms of working with people in other states that we haven't worked with, we're actually in a position where we're able to be a little bit, not in all markets, but we're able to pick and choose based on not just do you have a product and do you have distribution, but yeah, are we a cultural fit? Do you have an interest in supporting this product? What resources are you going to put behind it? How do you manage inventory? How do you handle payment? All these questions that you would ask and maybe we didn't have as much leverage on, I think, a few months ago or a year ago. That's starting to change for us.
Mm-hmm. And then just like the logistics of getting a product on the shelf, who do you have to go and sort of sell to get that product, in the retail sort of environment?
So once we've established production and we make product, it goes through testing, and then you typically have 50,000 units in a warehouse. It's usually that same partner that has distribution, i.e. trucks and drivers, that can deliver that product to retail. And they typically have a sales team that is calling on dispensaries at each market. Again, they vary, but you have, everything from, a couple hundred dispensaries in the smaller states up to a couple thousand in California. And typically that sales team is calling on dispensaries, talking about Major, sending out samples, talking about our budtender education programs, talking about how it's been a success in other markets. And usually you see stores taking, I'll take 1 case or I'll take 2 cases. And, the pattern just repeats where they have the 2 cases, they sell out in 2 weeks, and then they order 5 or 10 cases and we're off to the races.
Gotcha. Now you talk about, you've got growth, it seems like, on a bunch of different angles here. You got new markets you can get into. You've got new products that you're developing. I guess the question is around like R&D. How do you determine what new products you want to make, and how much money do you spend, or how much of your resources is spent on developing new products?
It's a balance for us. A lot of companies are taking every last dollar and putting it into R&D and putting it into growth. We believe in investing in new products. We believe in designing new products. We've done that pretty efficiently, as you see with gummies, as you see with new major flavors and formats. Our product pipeline right now is about 10 products deep, of products that have not yet been announced, have not yet been shown to partners. These are products that part of our team continues to ideate on. And they ideate on flavors, but we also ideate on brands. Those are 2 different teams. Flavors are done by scientists and food scientists. Brands are done by marketing people based on current trends. So we're data-driven in terms of designing new brands. We're somewhat data-driven as it comes to launching new flavors, but we're also palate-driven, emotion-driven. When we taste something that just tastes awesome, that the market doesn't see, or like, we don't really, passion fruit is an example. There's no other passion fruit product on the market. Major launched passion fruit because it's this pod-like amazing flavor, which not everyone sort of expects or knows what they're getting, but it's unique and it's wonderful. And we launched and it's successful. So again, 2 very small teams develop our products. As I mentioned in our presentation, we're really an IP business. We come up with great products. We have a tailwind of having a very successsul product. But the new products we've introduced have also been successful. So our partners have a level of trust in working with us.
I can't help but say it sort of reminds me of another brand that a few people might know of, a company called Coca-Cola. You guys have the formula, the syrup, and you're finding people to retail and distribute the product. Is that correct?
Indeed. I should be less humble because certainly we do look at Coke as a company to emulate, obviously gigantic by a factor of many.
Sure.
But it is a lot that model of you own the IP, you're working with distributors. Coke works they don't own the property and plant market. They work with Coke distributors to take out the product. They're the ones coming up with Coke Zero and some of these other products. Coke Zero is, of course, old now, but all the new products that come out with. And they take them on, they sell them and distribute them. And if something doesn't succeed, that's okay. You pull it off the shelf, try with something else. But yeah, we really think it's a great model to consider. Another comparable we've been called is we're like a Subway franchisee or franchise. They establish the stores. We supply them with all the materials and provide the backup and marketing and build the brand. That's more imperfect, I think, because we're not licensing to retailers. We're not licensing a retail shop, but we are offering the major franchise to people and to people who are successful and very good at this business already and know the nuances of each market.
You talked a little bit about your financials. I saw on your slide you got about $400,000 in debt. Maybe give us a sense of where you are financially. How much cash do you have, and you do need more? I imagine all small companies always like to have more cash.
Yeah, we're making money, and we have this note that we have to pay. So when we look at our cash flow, we look at this note, which we have until the end of the year to pay. We see paying that note out of cash flow. We also have a small line of credit. So we see making it through with some room to spare. The part that we don't like is paying off this note in such a short period of time. It does string us up a little bit to be able to make some riskier bets that we might want to make. Example might be if there was another brand that we thought we could make successful and do an acquisition for a couple $100,000 and some shares. We might not do that right now. In fact, we wouldn't do that right now because our only goal is to pay off this note and grow our profits. So it's hampering our flexibility to some degree. I think we would probably welcome some types of structures where we could put a little bit more cash in the bank. But we have strong directors that support the company if we need to. And as I mentioned before, we're paying out this note out of cash flow in any event. So we're able to fulfill our obligations and continue to grow our profits. But I would say our cash position is it's not optimal. We have a couple of $100,000 and we're making money, and so it's going to be fine. But we would entertain proposals for more capital, but it's not a requirement for us.
Yeah. It's a good to have, but not a need to have right now.
Yep.
So the last couple of days there's been some noise around a change in I think it's called the scheduling or classification of cannabis in the U.S. on a federal level. If and when that happens, how does that affect you guys in any way? Is it what is it? What could that do for you guys?
Well, net is positive, but I'll go on both sides of it. It's positive because it helps the capital markets. It helps open up investment. It helps open up interest in the space. By moving this from Schedule 1 to Schedule 3, just taking cannabis out of that criminal schedule is important for people on a psychic level. But in terms of the actual law and people getting persecuted, it doesn't change that much. What really helps is I think it opens the door to a Safe Banking Act. The Safe Banking Act makes banking easy. Cannabis is very bankable already, but there's still banks that are banned from investing in it. There's still banks that you have to skirt around to be able to pay off be able to pay certain partners and have them pay you. So there's a convenience factor in there, but overall it's leading to this destigmatization, which helps people buy more product, which helps people experiment with cannabis, which we're seeing in markets like Minneapolis. You can buy hemp-derived THC drinks. They're very low dose, but you can buy them in bars in a Total Wine. So all this is starting to happen.
Right.
One thing I'll just mention, though, that's not everything I've mentioned so far is pretty much party line of any executive in the cannabis industry. In our case, we don't mind cannabis not being federal legal for a little while longer. The main reason is our model makes us super nimble. We're in 10 states. We want to be in 20 states. If a few more open up, we want to be in 30 or 40 states. Once we're in all 30 or 40 states and have our products established in cooking, and like I say, I think that's going to happen in the next 24 months for us, and so just the states that we want to get into. Once that happens, I welcome federal legalization. You know, because then it opens the door. We already have our products nationally across this gigantic market known as the United States. But prior to that happening, I like the fact that we have a competitive advantage to be able to go into states with our model. That people who are in flower or growing or greenhouses, it's tough for them to do, whether it's legal or not. It's tough for them to go into new states. You look at some of the largest MSOs, and they're not really in more than 10 states. You know, we're going to have more coverage than most MSOs do.
The challenges you face, like what sort of keeps you up at night right now running the business?
Well, there's the obvious one of just you know, changing consumer tastes. That's always something. Again, it sounds obvious and trite, but most companies, when they build a product that's successful, they sort of go, this is going to go on forever. It might. It's entirely possible that the cornerstone 5 flavors of Major are a Coca-Cola of cannabis and stay that way. But there's plenty of consumer products that were super popular for a while, and then people just get tired of it. You know, they need a refresh or they want to try something new. So it's important for us to have that pipeline built. I would say certain markets keep us up at night. You know, we're extremely successful in some markets. In other markets, we are, you know, at war with other brands, fighting for shelf space, duking it out. It's battle like any other business. And if you get a call from a sales rep that says, yeah, this store just dropped us and replaced us with X, I get that same pit in my stomach that any business owner owns. You know, it's battle like any other business. But I think, you know, as long as you're winning more than you're losing, you get up in the morning and you feel great. But yeah, I'm not really giving you a unique answer on that, because it's pretty typical for us. Fear of being replaced, fear of being disintermediated. You know, just things happen in the consumer packaged goods business, and you have to have your risk distributed, and you have to have a pipeline of products to be able to mitigate that.
Now, John, you've been public for, I think you said about a year. You know, even in the course of this last year, sort of the cannabis sector's come in and out of sort of popularity sort of a few times, I'd say. But what do you think the status is right now within the capital markets? Like, are you getting phone calls from investors? Is there more groups like us that are sort of interested in finding out the story, or not? I mean, you're a little bit of a hybrid. You're a US-based company listed up in Canada, you know, not well known like some of the big players. What's the response been being a public company right now?
I'm glad you're asking me that today and not 6 months ago. Or 4 months ago. So like the last month has been terrific for us, because I think people are starting to pay just a touch more attention. We haven't, you know, we've seen some higher volume days, still the occasional day of low volume, but we are seeing a little bit more interest in our stock. You know, we listed this company at 10 cents. We did our offering at 10 cents. We dropped down to 4 cents. I accumulated a fair amount of stock between 4 and 7 cents, because I know how successful this business is going to be and is. You know, we kind of popped back up to this par level of 10 cents where we did our offering, and that's fine. But I think we're in this mode of, you know, we're not afraid to wave the flag and do some promotion when it's in the right environment, like this one, because I want people to know the story. I want great shareholders. You know, you do a public company so you can be public in your success, and that's what we're looking to do. But it's at times, I think, been maddening that we think that we're building. It's not just a great cannabis business. We're building a great business that's been run very capital efficiently. And there's times where I think we wish we were a little more recognized. That's changed in the last 3 or 4 weeks. I think it's going to continue to change based on some other presentations that we're doing. But it's been it's been an up and down ride since we've been listed in July of last year.
And I mean, kind of a little bit back to what you were saying earlier. You got a little bit of debt. You wouldn't mind having a little bit more cash in the bank. Would you guys entertain doing a financing at these levels?
So we don't want to raise new capital at 10 cents. We would rather suffer through using our cash flow, paying off our debt, and so on and so forth. We would entertain doing a raise at, if we got to some different levels. I think we'd entertain doing some convertible debt that converts a little higher. And I think that's actually that would be an attractive proposition to certain investors where they're getting paid a pretty decent coupon and able to convert that with some upside without us doing dilution here at 10 cents or 3.8 million in valuation. So we've shied away from that unless there was a compelling reason. I would never say no, but or I'd never say never. But we're trying not to raise capital at these levels.
Now, one of the questions that came in is around expenses. You guys obviously run a very lean business. It's a royalty style business, so it's not like you have to have a whole bunch of employees. But give us a sense of what your monthly expenses are, and then is there big variability in your marketing expenses? I imagine your partners are doing it for a bit of the marketing, but what do you spend in marketing for the products?
Yeah, it varies by market. As you can imagine, there's a state like California where you've got to spend some money. Then you have places like Missouri, Mississippi that are a little more controlled, and it's your partner's influence that drive the market. So, look, last quarter we reported just shy of $400,000 in revenue, and around the same thing in expenses. Of those expenses, you have about a third of that going into cost of goods sold. You have a third of that going into management, labor, promotions, people on the ground going store to store. That's how we support our partners. And then you have about a third of that goes into, at least in this particular quarter, that goes into what I would call corporate overhead. Last quarter we had to pay for our annual audit, some other fees that happen annually that were I find unpleasant to pay for, but it's part of being a public company. But yeah, we try and keep our core business overhead to around 150K per quarter. That meaning sort of keeping the lights on, paying the people that run our company, and the other part, which is around equal, is cost of goods sold. Failed to mention this. We do provide packaging to our partners. That's part of COGS. So while we receive that $2 royalty, a portion of that, I'm not going to say it publicly because it varies by market, and I don't want any partner getting upset. But a portion of that is spent on a plastic bottle and a label that we supply to our partners. We do that to be able to do some tracking. We do that to be able to control the look and feel of our brand, and it's just a way for us to have some influence on our partner without them being able to produce and sell without us knowing.
Perfect. You had a great slide. I always love to talk about sort of the go forward look and catalysts or ideally metrics. And what do you think makes the most sense for an outside investor to pay attention to sort of recognize how well you guys are doing as a business?
Yeah, so it's I mean, I say 2024 catalysts. These are probably presented in reverse order, actually, in terms of sequence. We think some of these are, we're announcing new markets on a regular basis. I'll just talk about a backward look. We've typically announced a new market every 2 months. And I think we can continue to maintain that rate for the rest of this calendar year. So, we'll always be announcing new markets, but those don't always show up on our financials very quickly. And they do take, as I mentioned, 3 or 4 months for any dollars to be collected. And typically the first month or two is nothing crazy because people are getting started. But I think the launch of gummies, when that ultimately happens, is we'll see how the market treats it. But I think that's a pretty exciting development if we're able to get gummies into the market. Where you have this. I talked about the current beverage market being $1 billion. The gummies market is about $6 to $8 billion. It's a big market that a lot of our partners are excited to sell major into because some of them actually aren't selling gummies right now. So they're going to use whatever leverage they have to get this on the shelves. So you look at something like that, again, pure speculation on my part, but it's conceivable that the launch of gummies could actually double what we do in terms of the business right now, because it's a bigger market and we're launching similar amounts. So I think gummies are exciting. I think launching new beverage products could be exciting. I think there's a little more risk attached because there's so much that we trust about the major brand as to our partners. When you launch a new brand, if you succeed, it's meaningful to your valuation. If you don't succeed, you don't succeed. It's not that big of a deal, but it's not as sure of a thing as new markets and new products.
One question that sort of came to mind is like, how do you price your products, or who sort of gets to make that decision in each market, you or your partner, or how do you sort of come up with a price for the different categories?
Yeah, I mean, we write this into our license agreements on how we collaborate on price, and it's really a formula of where the market is, what our costs are, what their costs are, and we come up with a range on where the product can be priced. Our partners are optimizing, obviously, because they're getting the majority of the revenue from that sale. They have incentive to price this as high as they possibly can. But they also have some floors in place so that our brand isn't being sold in a way that we don't want it sold. So we're looking at the market. I mean, again, the price of major ranges from at retail ranges from $10 all the way up to $25 in some markets.
Wow.
But that's again the nature of doing business in different states with different rules, different prices of distillate. We're making these products. We're taking cannabis oil, it gets turned into an emulsion, which makes it water soluble, and then that goes into our product. The price of distillate can vary from $800 in some markets per liter, all the way up to $8,000. So that can have an influence on price as well.
Of course. Well, I sort of asked all the questions I can come up with, and I think the really last thing here is just to give you an opportunity to leave us with a key takeaway or any messages that we may have missed that you want to make sure gets out to our membership base.
Yeah, I think the key thing I want to say, look, we have our investor email listed here. My personal email is John@Nevis Brands. I invite any of your listeners, if you take a position in the stock, which I invite you to do, if you email me, just know that you'll get a response back. That type of response maybe doesn't scale forever, but for now, I like to keep our investors in touch. I like to be able to connect with people. It's the cliche of my door is always open, but right now my door is open to talk with investors. And I think we have a great story. I think we have some exciting catalysts coming out. And I think anytime you get a chance to look at a company that is rounding the corner of profitability with a prior history of success, I think that's a pretty exciting formula. So I hope some of your listeners and viewers agree. And I look forward to being in touch with some of you.
Fantastic. Well, that's a great way to sum it up. We've been speaking with John Kueber of Nevis Brands, symbol NEVI on the CSE. John, great catching up today, and certainly we look forward to catching up the next little while after a few more milestones.
It was an honor to be here. Thanks so much, Paul.
Thank you. Bye for now.
Bye-bye.